These popular TradingView indicators are used by hundreds of thousands of traders. Are all of those traders actually making money right now? Probably not. Most people follow these indicators exactly as designed and still keep losing. We need to know why. Why do these famous indicators give beginners such different results? I have been trading for 14 years and this is what I made in a single week. After years of trial and error, I reached one conclusion. Even famous indicators need its own method to turn signals into real profit. Does famous mean good for beginners? Absolutely not. So today, I will grade them with 3 cold hard criteria based only on real trading data. We check 3 things: whether the direction is clear, whether you can manage your risk, whether a beginner can follow it right away. And at the end, I will show you the one indicator that beginners can copy the easiest. From setup to real trades, I will show you everything, nothing left out. Stay until the end. First up, the number 1 indicator on TradingView, SMC, used by 150,000 traders. SMC shows where institutional players place their orders and draws those footprints on your chart. Simply put, a breakout while the trend continues is a breakout structure. A breakout while the trend reverses is a change of character. It shows direction in a very intuitive way, but here's the problem. A change of character appears and the reversal never comes. The price just keeps going. Look at this. A change of character appears here, you enter expecting a reversal, but the trend just keeps dumping. This drop is almost 1,000 points on the NASDAQ. If you trust the change of character and keep averaging down here, your account is gone. And SMC does not stop there. Order blocks, FVG, Premium Discount Zone, EQH, EQL, the concepts never end. Realistically, a beginner cannot master all of this, and even if you can, it takes way too long. But if I trade with this indicator, here is what I would do. I would only enter after BOS in the direction of the trend, using the major highs as my range. I would exit at the first opposite change of characters. For catching an inflection at a change of character, I would cut my position size way down and only risk a small amount. A normal position sizing happens only at a BOS. This way, even when the direction is wrong, the size is small, the risk stays under control. Let us sum up. The change of character signals appear way too often, so the direction is often wrong. The stop loss range is too wide, so good risk to reward ratio is hard. And there are too many concepts, so running it alone takes too long. It is good for reading key zones and the trend direction, but it is not enough to enter this alone. You need another filter with it. So the most popular indicator used by 150,000 traders, I put it in C tier. Number 2, super trend. This one is really simple. It is one line that follows price. Green means up, red means down. Using it is just as simple. The moment the color flips is your entry. Red flips to green, you buy. Green flips to red, you sell. That's it. Look at this trending section. The line flips to green here, so we take a wrong position. The color stays green, we keep holding. In sections like this, it lies the whole trend with perfect timing. But look at this part, the line flips to red, so we take a short, then the price snaps right back up. One big stop loss right there. In a sideways market, the color keeps flipping like this and keeps faking you out. So here is how we should use it. Manage the risk and ride the trend longer. The key is staking time frames. Check the color on the big time frame first. The big picture is green, right? Then we only look for wrongs. We go down to the mini chart and we only enter when this one also flips to green. Only when the big candle and the small candle show the same color, then pick your hours. When the news hits, we do not trade. Remember those big stop losses from earlier? Most of them get filtered out by this time filter alone. The indicator gives us the direction. We only decide when to trust it and on which time frame. Let us sum up. One line, one color, the direction could not be clearer. The color flip gives you one clear line, so your stop loss placement is obvious. You understand it instantly and act on it right away, and it never repaints. But on its own, it gets faked out in sideways market. So you must add the time frame filter and the time of day filter. Keep those two conditions and it is very powerful for beginners. A tier. Number 3, Williams Big Fix. This indicator shows how much fear is in the market. When a green bar appears at the bottom, it signals panic. The market has dropped hard and this could be the bottom. This indicator focuses on catching bottom. On the other words, buying. A green bar appears, you treat it as the bottom, and you buy where the peers picks. But using this on short time frames creates a problem. Look, a green bar appears on the mini chart, you buy thinking it is bottom. The price drops again, another bar here, it drops again. The bottom is not the bottom. Buy every signal like that and you are catching a falling knife over and over. In a downtrend, it keeps printing buy signals and every buy gets trapped. Also, this fear concept was originally built for stocks. So on short time frames, it does not fit futures markets. But move up to the daily chart and it works on the NASDAQ and gold too. And it only focuses on buying, that is the another trap. This indicator was designed for daily and weekly chart. It thinks in days and weeks, not minutes. So here is how we should use it. A green bar appears on the daily chart and closes. Then we look for a buy the next day. The stop loss goes below the previous day's low. Now the stop loss is clear and the direction is simple, buy only. And if I trade the mini chart, I could use it this way. A green bar close on the daily. The next whole day, I only look for wrongs. Then I enter when a buy setup appears inside that day. This indicator can catch the exact spot where fear hits its peaks, but it only gives you the entry, it does not give you the stop loss. You set the stop yourself using the candles. Still, you buy based on one single bar. For beginners, that is not hard at all. And when a beginner catches a buy on the daily or weekly chart, one trade can ride the entire trend of a day or a week. A tier. Number 4, MACD Custom. It appears as a histogram, but it works exactly like the basic MACD. It takes TradingView's built-in MACD and adds direction colors and a multi-time frame function. Reading it is simple. A golden cross means buy, a dead cross means sell. A dot prints at every cross so you see the entry timing instantly. And MACD gets the direction right most of the time. It hasn't been tested for decades, so it is good at catching the big flow, but there is one weakness. It lags. And in a range, crosses appear way too often, so a lot of those signals are just noise. Take every one of them in a stretch like this and you are stacking up rows after rows. So I do not chase every cross, I filter them one more time with divergence. Here is what divergence means. The price makes a row, but the indicator makes a higher row. The chart looks like it keeps falling, but the selling power is actually running out. When divergence appears first and then the golden cross prints. That is the one I take. A cross with no divergence, I skip it. For the exit, I sell at the dead cross. One extra filter, and you pick your spot before you enter. Let us sum up. The direction is solid, but the lag hurts. You exit the dead cross, so the stop loss is clear. But if you want the filter, you have to read divergence too. More things to watch. It is a good indicator for training your fundamentals. Divergence filters your spots well, but it takes experience and your checklist gets longer. One step short. B tier. Now the final one, number 1. You'd never have guessed this one, but even this one has a weakness. So at the end, I will show you the indicator that removes all of these weaknesses, the best one for beginners. Watch until the end. The last one, squeeze momentum. It is built on the Bollinger Band. The market quietly builds up energy, then explodes in one direction. This indicator catches that moment. Reading it is even simpler. Just watch the color of these bars at the bottom of the screen. Red flips to green, you buy. Green flips to red, you sell. It flips to green here, so we enter. It flips to red, we exit. We enter again here, the color holds, so we hold. The color flips again, we exit. The opposite color is the exit signal itself. Entry and exit come as one package. And because it is built on the Bollinger Band, it is great at catching the moment when power explodes one way. As long as the color stays red, the trend is alive. Holding while the color holds, and you take home an entire leg of the trend. And it never repents. The signals stay the same when you look back. When you practice on all the charts happens the same way in live trading. But this indicator has one rule only. Color flips, buy or sell. Trend sideways reversal, the market changes, but your response never does. 3 different situations, one single answer. In a trend, you should hold to the end, but the color flips and you exit early. In a reversal, the color flips late, you enter after move is already over. One answer for everything, that is the weakness. My fix here is the time filter. I only trade the hours when the trends come out, the US often, the European often. When the news hits, I rest. Picking the right hour alone cuts out most of those small stop losses. Let us sum up. One color gives you the direction crystal clear. The opposite color is your exit, so the rules from entry to exit build themselves. Nothing to memorize, nothing to judge, no repenting. It performs the way you practice. Clear direction, managed risk, beginner friendly. Only one indicator checks all 3 boxes. Squeeze momentum S tier. Even the best indicators each carry at least one problem. They give direction but no entry spot, or one single response for every market, or no risk management, or way too much to study. So I built the indicator that beginners can follow the easiest, and it is free. Let me show you everything right now from setup to real trades. Let me add the indicators on TradingView. Go to indicators, then invite only scripts. We will add 3 of them today. To access, check the description below. It is free, so anyone can get it. BB ribbon first. Let me pull this one up. You see Bollinger Band displayed as ribbons above and below. Normally with Bollinger Band, you sell when price touches the upper band, and you buy when it touches the lower band. But that misses the bigger trend. Price touches the upper band, you short, and it just keep climbing. You buy the lower touch and it cuts straight down. Trust touch the band, enter alone, and you are set up to lose. That is why I split the band into ribbon. You see 2 ribbon, a green one and red one. The green ribbon is where you look for buys. The red ribbon is where you look for shorts. Moving forward, we will call them the buy ribbon and the sell ribbon. These ribbons catch 3 situations: trend, inflection, breakout. The market pushes one way, that is a trend. The direction bends, that is an inflection. A brown level snaps, that is a breakout. The market repeats these 3. Let us go one by one. The trend type first. Let me show you how to enter with these ribbons while a trend is alive. To sharpen my entries, I watch the 20 moving average with it. The 20 MA points up and the price touches the bottom of the buy ribbon, buy. The 20 moving average points down and the price touches the top of the sell ribbon, sell. We only enter when the MA direction and the ribbon point to the same place. Look at this chart. On the 1 hour chart, the 20 MA points up and the price touches the bottom of the buy ribbon. Buy here, and the price climbs steeply, carrying the uptrend forward. Simple but powerful. But check one more thing here, and your win rate completely changed. We will add one more indicator. It is called the dominance map. Same as before, check the description below and add it from invite only script. Now look at the top right of the chart. It shows you the score. It is Battlefield on the buy side or sell side. It combines 4 trend reading algorithms into one score. 4 to 0, 3 to 1, 2 to 2. Same setup. MA pointing up, price at the bottom of the buy ribbon, but when the score 4 to 0 for buyer, the whole market is on the buy side. That buy works much harder than a buy at 2 to 2 where the sides are even. Look at this chart. The MA points up. At the same time, the price touches the bottom of the buy ribbon and bounces with a tail. And the top right says 4 to 0, buyer dominance. The ribbon gives us the spot. The map confirms the battlefield. The ribbon tells you where to enter. The map tells you which side is likely winning right now, scored by trend algorithms. And after this, the price surges up hard. But even entering with the trend, you can lose when the price refuses to come back inside the band. A squeeze breakout can fire right through the ribbon. The price taps the sell ribbon and blasts straight up, or it taps the buy ribbon and slides down with no bounce. So how do we separate a breakout from an inflection? Let us look. The second type inflection, this is how we catch the reverse spot where a trend bends. The price touches the bottom of the buy ribbon and the spot overlaps a demand zone. Then it closes as a doji candle. That means buyers are holding it up from below. That is the inflection signal. So we never read the ribbon alone. We check whether the ribbon overlaps the demand zone and whether the candle holds that spot. Look at this chart. The price falls, then touches the bottom of the buy ribbon right here. And this is a demand zone. The ribbon bottom and the zone line up exactly. The candle close with a long lower tail. Buy ribbon, demand zone, candle tail. Take the buy where these three overlap and you watch the direction reverses hard. But catching inflections takes a lot of experience. You think this is the bottom, you buy, it keeps falling. You have all been there. I kept asking myself how to make inflections easier to spot. So I built this indicator and I use it myself. It sits at the bottom of your chart. Moving forward, RSD will be sure for ribbon squeeze divergence. Let me add it. What we watch here is divergence. The price makes a lower low, but the flow line below makes a higher low. That means the power pushing the price down is running out. The indicator draws a green diagonal connecting those two rows. That is a buy divergence. And this divergence does not connect just any rows. You see the black Bollinger Band words on both sides of the flow line. Only the rows pushed outside those words count. Because getting pushed outside the word means the power stretched to its limit. A row that goes outside and comes back, that is a row that truly matters. A divergence built from those rows, that is one you can trust. Look at this chart. The price falls, then touches the bottom of the buy ribbon here. It closes with a doji candle holding the spot. Now look below. The price makes the lower row. The flow makes a higher row. Green diagonal, buy divergence confirmed. And this row, the flow gets pushed outside the Bollinger Wall and comes back inside. One more thing, see the green dot at the very bottom? This dot prints only when the indicator reads big money entering on the buy side. Divergence says an inflection is possible. This dot says the other side's money has started coming in. When both appear together, your conviction goes up another level. The divergence shows the possibility, the ribbon gives the spot, the candle confirmed, and the green dot prints. That means pressure power entered right where the price fell. Take the buy where all of these overlaps and you trade spots with a high risk to reward ratio. This alone filters out half of the fake bottoms. Then how do we read breakouts? This is how we catch the moment when the direction is flows one way. The price breaks through a supply zone and a powerful candle must come with it. We are not just watching the band break, we are watching which candle did it and how hard it pushed it. But a powerful candle sounds big to a beginner. How big is powerful? That is the problem. So this time I built that judgment into the indicator. Look at this chart. At the breakout moment, a BOB mark prints. I split into BOB1, BOB2, BOB3. BOB1 prints, a trend may be starting. BOB2 prints, that trend may be getting stronger. BOB3 read the location. At the start of a trend, it announces even stronger trend beginning. But right in a long trend, after 3 or more BOBs already pushed the price bar, it can be the final candle where the trend burns its last power. And you should read BOB across multiple time frames. A BOB on the higher time frame than a BOB in the same direction on the lower time frame. That trend earns more trust. Buy side BOBs print in teal below the candle. Sell side BOBs print in red above the candle. Look at this chart. The first BOB3 prints. Dozens of candles go sideways, and this is the trend breaking out of the range. A moment later, a BOB2 prints too. Now, the higher time frame, on the 1 hour chart, a buy side BOB1 and BOB2 are already on the chart. And now check the thin color line at the bottom. This line shows whether the power is speeding up or slowing down. At the breakout, if this line is deep green, power keeps piling onto the buy side. If it is pale green, that power is fading. BOB stamps the breakout happened. This line shows the power is still alive. A buy side BOB appears, the line is deep green, and the green dot prints too. Big money is on board. Every breakout is made by dominant side. It is still adding orders, so you can raise your conviction one more level. Take the buy here, and you ride the whole uptrend that follows. You used to eyeball candle strengths or get fooled by market patterns. Now you just check for a BOB. Try this indicator yourself. Tell me in the comments what works and what to fix. I will keep updating it with your feedback. We are building this indicator together. This works on NASDAQ, gold, forex, crypto, and more. Dominance always reveals itself. Read it and write it. See you in the next video. Thank you.